Big news for General Motors today as their stock soars after beating Q3 earnings expectations. GM also raised its full-year profit forecast and lowered its expected impact from tariffs. For more, we're joined by Stephanie Brinley, Associate Director at S&P Global Mobility. It's good to have you. Thanks for taking the time.
Thanks for having me on.
So looking at these earnings from GM, was this something you anticipated from the company?
They seem to be moving in this direction, and there have been a couple of benefits with the offset coming through for imported parts that have helped them. And their sales for EVs have been strong in the last quarter. A lot of them have, but GM is well positioned for that, and they're positioning their trucks pretty well. So the specific numbers we didn't forecast. We don't forecast that. But in general, to see them do strong matches what they've been doing earlier this year.
GM North America has announced plans to get back to between 8 to 10% margins over time. Can you help us better understand what might actually have to happen here for them to do that?
Oh, you're going to have to see some relief on tariff costs, I think, to a degree. And you're going to have to see more margin on the EVs. But also what is going to help them a little bit is some of the less pressure on regulatory situation means you can lean back more into trucks and SUVs and ICE and HEV vehicles, which do have better margins in general so far than electric vehicles do. So being able to change that product mix will make a difference for them. And if there are any improvements in the tariff situation over time, that can help as well.
I was going to actually ask you, how feasible is this without a substantial reduction in tariffs? But you're saying there probably needs to be relief from tariffs for this to happen?
There probably does need to be some. I mean, we still have outstanding tariff situation with Canada and Mexico and South Korea isn't yet resolved, and that's a big one for General Motors in particular. Those things need to be resolved. We need to see what happens with USMCA next summer. So on a trade level, there's still quite a bit of unknown out there, but I think that they're balancing and managing as well as they can. The trade unknowns kind of mean it might take another year or so. It might be even into 27 before they really get to where they want to be. But I think that they've done a solid job of putting things in place in order to do that as much as is in their control.
Yeah, let's talk about that because GM did lower its expected impact from tariffs. Can you kind of help unpack what that actually means?
Well, what they said, effectively what it was largely because the U.S. extended the offset for the parts that you import. They're giving 3.75% based on the MSRP of vehicles that you build in the United States. They extended that. It was initially going to expire or step down to 2.5% next April and then expire completely. That's been extended to 2030. So that's given them a little bit of wiggle room, and there it gives them an opportunity to save for some of the parts they're importing that aren't USMCA compliant.
You kind of already touched on this, but obviously we have to think about the supply chain here when it comes to GM and other auto plants in Canada. We're talking about certain aspects, aluminum, semis, rare earth. How fragile is GM, do you think, in light of what we're seeing with supply chains right now throughout Canada and North America?
Oh, I think everybody is in a fragile situation, and semiconductors seems to be one, and rare earths. Those are the two that are sort of sitting out in wait, and there is less ability to, I think, handle and control the rare earths. That needs to be resolved, I think, a little bit more strongly. Semiconductors, I think GM alluded to on the call, they're doing as much as they can to get ahead of that. Aluminum is partially the Novelis fire causing strain in the supply chain. That is as oddly as one of the more manageable situations in here. You know what that is. It's a plant that you've got to get back up online. There's a little bit more control and understanding of that than there is something like, are you going to have a tariff on semiconductors and when are you going to have supply of rare earths? So there's a little bit more control on that one. It still has an impact, but I think it's a little bit more manageable in terms of getting that plant back online.
We're watching the news today as well that GM is dropping its electric van production in Ingersoll, Ontario, another blow to Ontario's auto industry. Were you surprised to see that news given how strong earnings were for GM?
I didn't expect to see that news, but it's given the outlook and the production that they've had so far for that truck. I believe the van has been out of production for a little while. It's been idled for a couple of months, so they're simply not bringing it back on. GM said they're going to try and find another use or another product or something within that facility. But the Bright Drop van just hasn't seen the numbers that they would like. sort of that last mile delivery electric van space has not grown in the way that it was anticipated to grow. And so I think that's really, it's just sort of, it's a market situation with that vehicle, and they just can't support it anymore.
But I mean, after what we saw with Stellantis and now this, I mean, what does that do to the Canadian market? Like, how much of an impact is that on the auto market in Canada?
You know what? It'll a little bit of wait and see, in the sense that BrightDrop wasn't seeing a large amount of production to begin with. So its production wasn't very strong. It had been down several times. It had problems getting launched with battery supply. And so there were a lot of issues with getting that product even online. It depends on what GM does with that facility. If there is another product that they can put in there, if there's something else then they can do. That facility, there's potential for that facility to be stronger than it was, depending on what GM does with it. And I think the BrightDrop production in itself wasn't that strong. Stellantis, that one also is a matter of what does Stellantis do with the Brampton plant.
Okay. And just lastly, though, like you touched on this, when we're talking about the auto industry in Canada, and I take your point on what's happening with this particular Ingersoll plant, but just overall, you mentioned the free trade agreement that we have right now, the USMCA agreement. That, like, how critical is that for the auto industry to either have that renewed or renegotiated in favor of Canada?
It's critical all the way around. It's critical for the whole ecosystem. And part of the criticality is making sure we understand what it is. Ideally, you still have low tariffs or free trade amongst the three countries. That seems less likely given the stance of the administration. But what's also super important is making sure that you understand what it is, and you can rely on it. Right now, you've got interim tariff situations, you've got Canada retaliation, understandably, and you've got the U.S. stuff. And knowing the negotiation is coming, there isn't a lot of certainty. You're working within the numbers that you have for now, but you don't really know what they're going to be at the end of 2026. So they need to be lower to really support the ecosystem and the supply chain as a whole. But it's also super important that we know what they are, and that it's something that you can depend on for the next, 5 to 10 years.
Okay. Appreciate your insight today. Thanks so much for joining us.
Thank you.
That was Stephanie Brinley, Associate Director at S&P Global Mobility.